We know that buying your first home can be really intimidating, and you might be thinking,
I don't know how to buy a home. I probably can't even afford it.
probably not. Just kidding. We're here to walk you through all of the steps for getting ready to purchase your first home. Let's get started. I'm Holly Haven.
And I'm Andy Haven.
Welcome back to the Haven Home Team channel. We are your North Texas no filter real estate team, and we are here to get you started on the path to buying your first home. Let's jump in. Okay, so this is really exciting. Andy, you have just started the process of buying your first home, correct?
I have, yeah. I'm in the process of building a townhouse currently.
Okay, so guys, this is a really good example because this is not any first home. You don't have to go buy a pre-existing home as a first-time home buyer. You can potentially find a really great option in new construction. And for Andy, it was a new construction townhome in Celina, which is Collin County, North Texas. So Andy, let's just discuss a little bit. What was the first step of getting started? I mean, obviously you drove past the townhome, you thought it was a really cool community, you walked in, you checked it out, but really what's the first step before you dive into that process?
Yeah, so before I ever even talked to the the property manager, I guess,
sales rep
at the townhouse, my first step was to talk to a lender. So I did get in contact with the sales rep's lender. Sometimes they do offer incentives, so that's something to look for. But I also contacted two other lenders. I wanted to get some kind of recommendations, kind of pick their brain a little bit about what lending options I had as a first-time home buyer.
Yeah, that's really important to consider more than one lending option, especially, well, really it's for anybody in the home buying process, but especially for a first-time home buyer because you just don't know what you don't know. Chatting with maybe an on-site lender with a builder, a couple of local brokers. So I'm going to put a little caveat in here. Guys, if you bank at a big bank, don't call them for your mortgage. That is not going to be the smoothest process, especially for the first home time buyer. But comparing multiple lenders, and here's a little thing that sometimes, right, our parents who purchased homes 20 years ago, maybe they haven't done it in a while, they have this way of making us feel really nervous about the process. And they'll tell you not to have somebody, like multiple people, pull your credit. And that is not the case.
Yeah,
right?
So I actually learned the hard way or learned the right way. I'm not sure. You can actually go to multiple lenders and they can pull your credit all within a 30-day period.
Yes.
So from the first time a lender pulls your credit to the last day the lender pulls your credit has to be 30 days. So I had 3 lenders pull my credit within 30 days. I was able to get options from them, kind of figure out which lender worked best for me, and go off of their timeline of how to better my credit score and how to better get a loan and apply for all of these options for first-time home buyers. So finding a lender that knows about first-time home buyers and has worked the process many, many times before is very helpful.
Yeah, and the benefit to comparing those multiple lenders is all lenders have a different process. They have different fees, different closing costs. And so really being able to compare those, you want to see apples to apples. Yeah. So we want to know one lender might be giving you a really great interest rate, or a builder preferred lender, for example, might be giving you some incentives, but those costs may not weigh out properly in the end. So we like to compare multiple lenders and really give you the best picture for what that process could look like and what your total payment could look like in the end. But that little notation about having them pull your credit all at once, what it does is it doesn't hit your credit as if you've had 3 credit pulls. It hits as if it's a comparison. So we had 3 lenders pull within 30 days. It hits your credit one time, which sometimes will knock your credit down a couple of points, but it's nothing to be afraid of. So Andy, we had something come up with yours that we did not expect.
Yeah, so I was actually told that being a
authorized user on our credit card
on a credit card can actually hurt your credit. The great part about it is that you have an extended amount of credit. Like the line of credit has started for 6 years or whatever. I'm 22 years old. I probably wouldn't have had a credit card 6 years ago. Right. But that line of credit is hurting me at this point because I don't currently have that much debt to income. So that is causing an issue. So I do have to get off as an authorized user. It has helped a very long time, and for that 6 years it was great, but to purchase this home I do have to get off of her credit card as an authorized user. With that being said, I would suggest that you get added as an authorized user when you are younger. It does help with your line of credit. It helps you be able to get credit cards, lower interest rate for cars. Like there's tons and tons of benefits, but when it did come to buying my first home, I do have to get off as an authorized user to help my credit there.
Yeah, and we found that out during the lending process. One of the lenders that she's talking to and getting some quotes from actually put her in contact with somebody that does kind of credit redemption, credit recovery. She has a great credit score, but because we have to remove her as an authorized user to make her debt to income balance more where she is in life, then this was one of the things that, kind of fell in our lap that we weren't aware of. So this is something you guys may run into, especially as a parent. We are doing what we think is best, and it is still a really good idea. Take that high school student, put them on as an authorized user. Don't give them the credit card. They don't actually get to spend any money on that credit, but it does allow them the opportunity of taking on your credit score from a very early age and showing many years of credit that you would not have had otherwise.
And the reason I actually found out about this is the lender that I had been kind of being in contact with and was using, they have a credit recovery department through
the company.
Yeah. So she's not even located in North Texas, but she reached out and she was just like, basically, this is your plan to raise your credit score, just so that you can get a better interest rate and you won't have to pay a ton of money to lower your interest rate and do a buy down.
Yeah, and this was another really great point to buying new construction. Even though you're getting approved up front, you're not actually starting that actual loan process, the real loan process, until 30 to 60 days before the property is completed.
Yeah.
So we've started this process in February, and you're not likely to close until sometime August, September.
October.
Yeah. So this gives them several months to kind of get some of these things in order so that when it is time to get that loan going and get the property closed, they're in a really good place.
This is also just another thing to add in there though. If you are looking to purchase a home, talk to a lender 60 to 90 days prior to wanting to buy a home, because hopefully that credit recovery analyst could help you raise your interest rates, credit score.
Okay, so my other question for you, Andy, is have you guys decided, are you going to go with an FHA loan or a conventional loan? Have you worked that out?
Yeah, so I think my lender has suggested conventional.
Okay.
Yeah, so I think we're going to go with a conventional loan. That is a minimum of 3% down instead of 3.5% with FHA. And if you're not a first-time home buyer, then it is 5% is your minimum.
Yeah, and so you cannot have been a homeowner within the previous 3 consecutive years in order to qualify for FHA. So it does give you some benefits on debt to income, and some other things are a little bit less stringent than a conventional loan. But you do have options. People think if they're a first-time home buyer, they have to use an FHA loan, and that is not the case. You can use whatever loan structure fits your needs, and that the lender, might kind of suggest based on your debt to income, how much cash you have to put down, and what your specific situation is.
Well, and as a first-time home buyer, you may not have a lump of cash to put down at 20%. So that option to put down 3% is really helpful. You might have higher monthly payments, but at the end of the day, if you can afford the monthly payments, but you don't have $150K laying around, which that's outrageous, but you know what I mean, then this is nice that you only have to put 3% down.
Yeah, it definitely makes it so that more people qualify than what they think.
Yeah.
So there's a reason we talk about this 20% down. You hear this number a lot. And what is the reason for that?
Yeah, so the reason people put 20% down is so that you do not have to pay PMI. So that's private mortgage insurance. And the reason you would have to put that down is because anytime you put under 20% down, you are not guaranteed to be able to afford that home, basically. That's why they kind of put that insurance on you. Make sure that you pay back the loan in full. It's just kind of like
it's a protection for the lender.
There we go.
Yeah, the lender's carrying that note. And if they're carrying more than 80% of the value of the property, then they're basically charging you an insurance rate to kind of help offset their risk, really.
Yeah.
So you hear a lot about 20% down, but there's the PMI, it's usually somewhere around $150, depending on the loan amount. Yeah. So that's at all loan packages, right? Any conventional loan, even if you put 5% down on a conventional loan, you're going to pay PMI. So you're going to run into this with FHA loans as well. And it really, kind of like we've talked about, just comes down to what your cash in hand is, what your options are, and what your affordability and debt to income come out to. So what the lender would actually loan you based on that specific property.
Well, and that's why I think people my age, or people just younger in general, first-time home buyers, they assume you have to put 20% down. That's something you always hear. You have to put 20% down on a home. That's not a thing at all, unless you're an investor. If it's a second home, you do have to put 20% down. So that might be also where you're hearing it from. If your parents have purchased a second home, or if you've just heard that in general, that could be where that's.
Yeah, and we've come off of a really crazy couple of years in North Texas where we were so competitive that it was not a good market for first-time home buyers or for any buyer that didn't have a crazy chunk of cash lying around. So now we're back into a little bit more stable market. We're still considered seller's market, as we've discussed, but it is much more balanced. So we are back in a market that is looking really good for buyers and first-time home buyers. So that's really the reason we want to bring this to the table today is you don't have to have $100,000 cash lying around in order to qualify to buy a home. So we're hoping we're driving that point home today and giving you guys just some of the quick details to help you get started. So let's talk about what's next in the process. So, we just talked about like, you don't have to have all this cash, but what if I have $20,000 I can go pull from a stock account or pull from, a savings account or somewhere else that maybe it's making me money? Does that make the most sense for every single buyer?
So not necessarily. Putting more money down does not always benefit you. So at the end of the day, $20,000 only decreases your monthly payment by around $100.
Yeah, so $100 a month versus $20,000 sitting somewhere that it might be making interest or might be making money is not always the best option to pull that out.
Well, and another way to think about it is if you have $20,000 cash lying around and your mortgage payment, your monthly mortgage payment is $2,000 a month, you can pay that mortgage for 10 months with that $20,000 rather than $100 off your monthly mortgage payment. So obviously, if that's what your lender suggests, then go ahead and follow his lead. But sometimes that's not the best option.
Yep, absolutely.
So if you'd like more information and would love some help as a first-time home buyer as where to live, where not to live, what can you afford, click the link in our bio for our buyer's guide. This is all the ins and outs of home buying, what we personally feel as a buyer, and how we can help you as a buyer.
Yeah, absolutely. So click that link, and then we have a couple of more things that we want to highlight. So we're not done just yet. Go ahead and check out the buyer guide, give us a thumbs up, and keep watching. Okay, one of the traps that I see lots of my buyers fall into, and not just first-time home buyers, but lots of buyers, is we go into a really beautiful open house, or we go check out, neighborhood just because we just want to see it, right? And that's great. It's great to educate yourself and know what the options are at every price point. But it's a little bit scary too, because guys, we can fall in love with something that we simply can't afford today. It doesn't mean we shouldn't work towards it or dream about it or make that our next goal. But I see buyers occasionally put all of their home buying thoughts on hold because they cannot afford the home that's $600,000. Guys, the best way to afford the home that is $600,000 is start with that first home that's somewhere probably around $300,000 or $350,000. That's kind of our norm. $250,000 to $350,000 is a really great first-time home buyer price point, and it allows you to continue, to grow some equity and then move up into your next home. So don't stop the process because you cannot buy that perfect dream home today.
Definitely not. The thing that I'm kind of focusing on as a first-time home buyer as well is purchase the home, stay there for 2 to 5 years, get your equity out, or sell the home. There's lots of different options there as well that we can go into in another video. But kind of use that as a stepping stone. So keep your first home, maybe use it as an investment property, rent it out. Go buy your second home, take the equity out of the first home, go buy another home, rent that out. So it's called I believe it's called the 2 to 5 step process. And it's literally because it's a stepping stone. And the one thing they always say is the best way to become a millionaire is through real estate. That's my favorite quote. So something to think about, even if you don't want to actually invest in real estate, it's a great way to get to that dream home one day.
Yeah, absolutely. And really the last point that we want to drive home is that we are in a fast moving market. Even though we're in a much market for buyers than we've been in for the last 2 years, you need to be ready to offer on the home you fall in love with when you fall in love with it. We are seeing homes move very quickly. And even though it may be that it only, we're seeing 30 to 40 days on the market, if it's the best home and it's at a great price, it's likely to be competitive. And we don't say that to scare you. We say that to prepare you. So going through these steps, making sure you're fully pre-approved with a lender, you have your credit ready, you know what your payment's going to be, and you're ready to dive in, just gives you a leg up when we do walk into that perfect house. And it might be that it's a home we scheduled to look at. It might be that you did walk into an open house or you walked into a builder model and found out that there's some affordability there and some options. So we want you to be fully prepared. And that's what we're here for, is really just to be a resource for anyone out there thinking about buying or just wanting to know more about North Texas.
Yeah, so I think going back to the first point that we made, the most important part of this whole process is to get pre-approved with a lender. If you don't know a lender and you know a realtor, reach out to the realtor, ask them, or you can ask us. We have lots of lenders that we use on a daily basis that we love. And as you know, I'm going through the process right now. I'm using lenders that I love, and we would love to recommend those to you guys if you need a lender.
Absolutely. Remember to like, subscribe, download that buyer guide, and we will see you guys here again next week.
Bye, guys.